Welcome to an edited version of the Future of Money Thinking. If you didn't make it, or you were there but simply zoned out, here are a couple of the questions we asked and some of the most interesting answers to them. Hope you enjoy listening. The first question we're trying to get a clear point of view on is, should we ban, regulate, or embrace cryptocurrency? Hugh Van Steenis, why don't you kick off?
I'm not even sure that it really is a cryptocurrency. I think it's actually an asset. So the first question is it more like a pound note or a dollar bill, or is it more like investing in the stock market or gold? And to give you an example of that, if you put your money in cryptocurrency, it's been 25 times more volatile than putting £1,000 in the stock market. So put it this way, if you're paid £1,000 at Christmas, you'd currently be only having £500 left to spend. But if you've been given £1,000 in August, it'd be currently worth £2,000. This, for me, is not the definition of a currency that's useful for us around the table to spend. And the second is, can you use it widely as a unit of exchange to try and buy stuff? One of the big banks has a cafe where you can pay in Bitcoin. And I've got a friend who bought a coffee in his lunch. The lunch was disgusting. So he went back and queued up and tried to return it. Bitcoin had already moved so much they refused to refund him. So I just don't think it's really a currency. I think it's more an asset. You should tax it.
But can I just understand something, Victoria? Do you think that Hugh's right, that it's an asset, not a currency?
Yes, I think at the moment it's not really.
That's an unfair question because it's only an asset insofar as it could, in theory, become a currency one day. Otherwise, it's.
Why? Explain that. Torsten, yeah.
Well, why is it worth money? It's not gold, so it's got no intrinsic value. You can't like melt it down and stick it on your chest. Well, you can do if you're really perverse.
Yes.
But you wouldn't do that, James. So you can't do. It's got no intrinsic value.
I think it's a fundamental innovation that allows people to, if you go beyond money and you don't think about money, in the end, it's like, I think personally, it's a governance tool which allows people to agree on a transaction, on an important decision without trusting each other and without anyone in between who needs to validate this. And I think, if you think about this, it's a core innovation it's not possible before. I think for me, the most interesting way to think about this is what the term that's been used, social scalability. It's like the technology that allows human as a civilization to scale socially by making transaction again, or potentially other types of decisions, and indeed keeping track of them on the blockchain, which is obviously an interesting innovation.
Lisa?
There's a very big separation between crypto and blockchain I think is going to be used across loads of industries, and we're just starting to see the potential of that.
So we're saying, everyone seems to be talking about the risk of cryptocurrencies in different forms around essentially some form of consumer risk, right, and the volatility and the uncertainty. But what I don't understand is, why should we embrace it?
Let's flip your question, which is, so you're saying, why should anyone embrace it? Well, who should embrace it? We can tell that because they've done some embracing. So criminals definitely should embrace it. This is like money laundering gold, because the whole point is that in theory, you can't tell who makes the transaction. So money launderers, criminals, gangsters, drug dealers, all that kind of stuff. Anarchist libertarians love this stuff because they've got this in their head, a story about the financial crisis, which is central banks can kind of have done all this dodgy QE stuff. They've splurged loads of money. It's going to debase the currency. What we need is a completely out of nothing to do with states, where we have kind of collective control over it, where nobody gets to fiddle with it. There's another group, which we'll call lefties, here to be unfair, who like it because they think it's a way to take control stop banks, not central banks, to stop banks creating money.
Torsten, why does a Bitcoin stop banks from being able to create
excellent
money?
question. Right, so two ways, depending on who. If you're that informed lefty,
yes,
let's call him Martin Wolf.
Yeah.
Okay. If you're he's obviously not a real person, but let's call him Martin Wolf. Okay. Right. He just thinks these bugger banks, they're always going to create instability, bust the system in the end, and we'll all end up picking up the can. Yeah. So what I want is a central bank cryptocurrency, having a blockchain and running this ledger, so that you can all hold accounts basically at the central bank, rather than. And I don't want your individual banks.
If cryptocurrency became so big, would it be the case that actually central bankers, when they set interest rates, would be of marginal impact because actually there was more money moving around in digital currencies than there was moving around in fiat currencies? How real is that risk.
The dream of the Bitcoin is that you've got a series of private sector currencies which will take over. Now, in that scenario, the central banks and governments will get very worried about controlling financial stability. Now, at the moment, Bitcoin's value is way less than 1% of payments, so it's completely irrelevant at the moment. I mean, where you look at the countries where it's most
all the
used,
best people.
it's South Africa, Korea, Russia, the three countries which are most overused.
Who's got smart things to tell us?
So my name is Simon Alvey. In terms of fears, I think the big one that as I understand it, is that the carbon emissions from mining these bitcoins are absolutely staggering. At a point where we are trying desperately to avoid environmental apocalypse, is this really a currency we can afford to actually spend our time investing in?
I think we're going to wind up on cryptocurrency because that was our easy opener. That was like a sort of light relief before we get to the difficult questions. Just to give a sense, I think that we'll draw on this question about asset versus currency. I think that there's clearly an element around the regulation, particularly around consumer risk and volatility. I think we want to give a nod. I mean, we're going to want to give a nod to the possibility of new potential, and I think this point that in the end we're in danger of worrying too much about something that so far remains a marginal risk. I do think we have to keep coming back to the problem that at the moment the users of it are not necessarily in the public interest, and so the regulation seems to me rather light and timid given the people who are using it. Right, now let's go to a really difficult question. Do we think that the disruption of the banks is going to be a good thing or a bad thing? And what I mean by that is, who's going to win out and who's going to lose out? Lisa?
If we look at technological innovation historically, actually, you look through the Industrial Revolution, actually a lot of the power of that innovation has been in the hands of the few. We're in the small business space. Small businesses have historically been hugely underserved across all different industries because they fall between consumer, where there's huge mass and you can kind of serve very easily. And we see that in lending. What we're doing is offering small businesses a really frictionless experience to come online, to borrow from a number of different investors at rates that are comparable to banks, but are just in this, there's a 10-minute application. About half of the businesses sign up outside of business hours because they're so busy running their business that they don't want to go in to a branch and fill out things similar in terms of the paper applications.
Catherine Wines.
Okay. I think if you think the banks don't actually serve a lot of people, there's 2 billion banks in the world. Obviously, a lot of them are in the emerging economies, but even in this country, I think the statistic is probably 1.5 million of adult population in the UK that doesn't have a bank account. If I look at the emerging economies, you have banks in every country, but they don't serve the population because the people cannot go to the bank, they're too poor, and the bank are asking too much. But what they've done, what you've seen is mobile money. The mobile operators have seen a gap there and used technology to be able to provide some kind of a financial system for people who have very low income. So now, and obviously the first one was in Kenya with M-Pesa, where your mobile, and we're not talking a smartphone, we're talking of a basic old Nokia, become your bank account. Your mobile number become your bank account, and you can receive money on that virtual account and send to make payments and to pay someone else. And that's the start of financial inclusion.
This thing is huge. So if I have my phone in Kenya, in a village, I can literally take my phone. I go to the person that sells me the minutes, my phone call minutes. Yes. You know when we used to have top-up phones?
Yes.
And they literally are an ATM. They will give me cash in exchange for taking minutes off my phone, or vice versa. It is a complete revolution.
Hugh Van Steenis?
What we learned from the banking crisis is a diverse ecosystem is a good thing. Mm-hmm. So for me, the big risks are twofold. One is, do some of the banks get hollowed out? They become the Toys R Us of future years because they just people skim the cream of profitable opportunities and they become less profitable. And the reason that matters is our savings and deposits and financial stability are still wedded with the banks. And so that's why when I go meet bank CEOs, they're obsessed by what Amazon's doing. Could Amazon then also take over financial services too? What about Google?
And what is the answer? Is it possible that Amazon could do to banks what they did to books?
They're already doing it.
They're already doing it. Amazon is lending.
It's a yes, but, isn't it? The trouble is that being a bank is still a very heavily regulated industry, which requires a heck of a lot of capital. and a lot of infrastructure. So let's be clear, in terms of true banking, like the banking as we like to think about it, in terms of payments, no, they're definitely having a go at payments insurance. There's already quite a lot of innovation going on.
George?
Yeah, no, I mean, I think in general, like, again, our view, like, investing in this sector is like any kind of productivity gain is a net positive. And I think, what you see most of those businesses, that's what they're going to create. And, I think it's, if you think, again, for people who like, for an economy, people trying to open bank accounts to start a company, a business, etc. If you remove friction here, it just makes the economy like work more efficiently.
Hugh Van Steeners.
One of my friends who's a venture capitalist said the perennial question he has with a startup is, will the startup get distribution before the incumbent gets innovation? And now, the banks have been very busy in the last decade dealing with the sins of the past. It's still $1 trillion of bad loans in Europe, and there were plenty more in the States. This is the first year where technology is now the number one item for the bank CEOs that I meet. So if I go to JP Morgan, digital JP Morgan is their mantra for this year. And so I think they're going to spend a heck of a lot more money trying to make things better for consumers rather than just solving the sins of the last decade. And I think that's important because they're spending billions and billions and billions on solving problems. And so the good news is that the startups are challenging them hard, do it better. And I actually think you're going to see in the next decade a much bigger response.
I'm going to go to the room because people will have experiences of banks and views on the city. Any points of view?
Hi, I'm Ben Fenton from Edelman here. Whereas in your first question you were dealing with questions of trust, because that is essentially what currencies are about, and we were discussing whether it was a good idea to rip up the human intervention in trust by introducing machine-based trust. I think there's a degree here that we're now talking about ripping up the human intervention in risk, because the calculation of risk is what underpins traditional banking. And I think that the existing practitioners of traditional banking did a pretty bloody good job in 2007-8 of driving us to the very limits of what you can do with calculating risk using machinery and quants and so on and so forth. The people who invented collateralized debt obligations probably kicking themselves they didn't invent cryptocurrencies. So how many, in a world full of more people, how much humanity do we want to take out of these systems? How much trust do we want to take out of currency? How much risk calculation do we want to take out of lending? Because whilst I can see the efficiency of machine-based risk calculation, there's also a lot of risk in that.
But just so we understand, are you saying, because the thing that's unclear is, are you saying that if you look at the financial crisis 2007, 2008, actually that human behaviour brought us to a very bad place?
Yeah, I think I'm not saying one way or another. I'm asking you guys to think about it, because on the one hand, taking humans out of risk calculation is itself, in my view, risky. On the other hand, we've seen how bad humans are at it.
Yes.
So,
Victoria?
Well, I think it's definitely the machine that brought the crisis. It was greed. But in the case of lenders, if you take out machine making decisions and you have a human understanding another human, credit or behavior with credit, it would be so expensive that the consumer is worse off.
I think this is going to be in the style of a very famous newspaper editorial that ended, the conclusion is yes, full stop, but maybe not, full stop. So ours, I think, will be on the banking sector and on the impact that there are clearly consumer benefits, speed and service. There is clearly a colossal benefit, not least, most notably in the developing world, around inclusion and the unbanked. On the issue of whether or not it concentrates or distributes power, I think we have to say that is as yet undecided and unclear, that there's diversity of provision, but in certain countries we're seeing concentration of provision and control. I think we have to lean towards the likelihood that it is going to have a negative impact on jobs in the banking sector and a negative impact on the big banks. And I think that the point that Ben Fenton raised at the end, which is do we or do we not want more humanity in our banking sector, is a really good and profound one to which we don't have an answer either.